Okay guys, so in this video we're going to talk about why Tesla stock has been dropping over the last couple of days. So as you know, probably Tesla stock was on a major crazy bull run, as were many of the stocks kind of trade as of recently. And the price of Tesla stock, after they announced that 5-to-1 stock split, the stock really ran up, and it ran all the way up to around $500, and then there was a huge catalyst that caused the price of the stock to fall. And that catalyst is simply a share offering. So a lot of companies have been doing this, basically due to the huge run up in stock prices, I would say, after the rebound from the pandemic. So let's take a little bit closer look at that and see what exactly is going on. So as you can see here, on September 1st, it was posted that Tesla stock pairs gains after 5 billion stock offering disclosed. So basically companies like to basically have a stock offering, and this one particularly was at the market. So usually companies believe in this particular case, Elon Musk definitely thought that the stock was overvalued, and they decided to do a share offering. So what this does is it ends up diluting your shares and my shares and whoever owns the stock quite a little bit, which is not too much, but it is 1% outstanding. So it definitely is not the greatest signal that the stock is definitely cheap, that the stock is overvalued. So if let's say that they did this offering at around $500, that means that there's up to 10 million shares added to the shares outstanding. And I think a lot of people took profits on Tesla stock as well, I think, with the huge run up and the fact that the stock is up major. Year to date, as you can see here, the stock is up over 300 and about 70% as of recording this video year to date. So this would kind of put the stock price, pre-split, it would put it at around $2,000. So we're still up pretty big from where I first $100, and that's when I was really talking about Tesla. I thought that at $500 it was still a fair value. This was before the split. So now we're basically at around $400 a share, which is around pre-split price of around $2,000. And I still think that Tesla stock is undervalued in the short run, but for some people that bought it at the top, now you're kind of down quite a bit of money. So what to do now? Well, the first thing to take a look at is there is plenty of support at around $400. So as you can see here, this is a key inflection point. So what I mean by inflection point is you can see here the stock hit a bit of resistance at around $400 or so, and then it came back down to support and it shot up. So I think around $400 per share. I think that the stock is a little bit still probably overvalued, but this is a much more better point to get back into the stock if you were waiting for an opportunity to buy, or perhaps maybe you're still holding on to some shares and now you want to add some shares after this. So what I'm personally doing is I'm simply, a lot of stocks sold off so far in Thursday's trading session. So I think that stocks are definitely a little bit overvalued in general, and I think it's healthy to see a pullback. We don't expect the Tesla stock to just continue to go straight up, because usually when a stock runs up too fast, it can go down just as fast, as we've seen with a lot of these pump and dumps that have been recently happening. So I think for long-term Tesla bulls, I think the most prudent thing to do with Tesla stock would simply be to just hold it. You're still getting that compounded annual growth. The company still is the #1 car seller, electric car seller in terms of China, which is the biggest electric car market in the world, and they're constantly adding new factories and things like that. And there's still a lot of catalysts coming ahead for Tesla in general. So I would say patience here is very key. If you sell the stock now, you can always buy it back cheaper, and that's another strategy that I think a lot of people are interested in. And it's something that you can do with some of these tech stocks that don't pay a dividend. Dividend stocks tend to be slower moving because a lot of people are basically holding on to those shares for the dividends, so they're not as likely to dump Tesla. But it looks like right here that a lot of people, when announced the share offering, I think a lot of investors said, well, if Elon Musk is going to be selling, then I'm going to be selling as well. So that's what's been happening with your Tesla stock. So I wouldn't panic here. I think long term, this won't really hurt the stock too much. We saw something similar happen with DraftKings. They did a share offering. The stock came back from around $40 or so. It came down to 30, and now it's back at 40 after Michael Jordan entered an equity stake. So, sometimes these share offerings definitely do, because dilution does hurt stock prices in the short run, but I think long term, as you can see here, if you take a more longer term view of Tesla stock, so We just moved to a 5-year chart. Okay, so as you can see here, as we take a look at a more longer term view of Tesla, we can see here that even over the last 5 years, there hasn't really been any major crashes or anything like that, and the stock has recovered. So as you can see here, there was a huge run up, and then, you know, a consolidation, and then the stock ran back up, a smaller run up, consolidation, and then now. So Tesla, I've noticed this pattern with a lot of high flying tech stocks. I think Apple is a very, very similar chart pattern. Basically what I'm saying is that when the stock runs up a lot, there's going to be a pullback, there's going to be some consolidation, but usually the stock within the next month or two, or maybe 3 to 6 months, the stock will recover and push past. So I expect Tesla stock to continue to follow this bullish pattern. You know, the companies, as long as they continue to hit their deliveries, that's basically the biggest question mark with Tesla. Will they hit their deliveries? And also that solar power unit. I think that solar power unit, a lot of things people don't talk about when it comes to their solar roofing unit, and that's kind of just building a lot of intrinsic value, because I envision a world where in 5 to 10 years, and obviously in parts of the world where there's a lot of sun light, a lot of people are going to be using solar roof panels and solar energy to reduce their energy bill. So that's kind of the icing on the cake with Tesla. Obviously, we're going to be focusing on electric vehicles here, but I think that roofing unit, I think that's going to add a lot of value in the long term and could potentially be a massive business, because obviously there are way more roofs to install solar panels on than there are cars to sell. So that's a really, really nice thing about Tesla. But I wouldn't worry too much here. I think a nice healthy pullback is a nice time to get into the stock with clear support around $400. And I wouldn't be surprised. Obviously, Tesla, they were able to basically earn a profit on the latest quarter with a lot of factory closures. So the fact that their factories are going to basically be open all of Q3, I expect them to post another good profitable Q3, and the stock should probably go even higher than 500. We could see a share price. I've had to basically update all of my share estimations. So my goal was kind of $3,000 for Tesla stock by around, I believe it was around 2025, but the stock has ran up so much, I think, that we could even see obviously post split price, that would be $600 per share, and we will probably see $600 per share probably by 2021, probably by around June or February. It just seems like that's just what's happening with Tesla stock, and it just seems like that as long as those deliveries are coming in, we're going to see those types of gains. So with like I said, to wrap things up, guys, I really hope you enjoyed this video. But this is definitely a healthy pullback, and it's something that we've seen before. But the good is that obviously, if you haven't bought Tesla stock before, and now after the post split, now with post split, you can still get your first share around $400 or so. And obviously, it isn't as good as buying it, like when I mentioned it earlier, back in like February or March. But the fact is that it's still 2020, guys. Tesla has a long way to go, and we still haven't seen a complete transformation of getting these ICE, internal combustible engine cars, off the road and replace these vehicles with electric vehicles. And once that happens, that's when you're going to really see the magic. I think Tesla is just beginning, and Elon Musk, obviously became one of the richest guys in the world recently. So nothing wrong with kind of riding this momentum. I think there's going to be a lot more momentum in the future. So it should be really interesting and really nice to see what Tesla does in their upcoming quarterly report. So after basically having a great quarter they did last time, it'd be really interesting to see what they'll be able to do without those factory closures. And then in the future, they're planning to open another factory as well. So if that factory opens, that'll just increase the production as well. So Tesla, just really good stock all around the board, and something that I think this is a decent pullback. This is a great time to add to your stake, and if you don't have a stake, to add to build a new one. So that's it, guys. I hope you enjoyed this video. Please smash the red subscribe button if you enjoy my videos. Full disclosure, I am a Tesla shareholder, and I like to cover these hyper growth stocks that I think can grow at least 40% compound annual growth, make you some money. So that's it for now, guys. Hope you enjoyed this video. Until next time, take care.